story tonight. For that, I have two sets of numbers, and these numbers are going to decide the course of the stock markets in the days and the weeks to come. One set of numbers is from India, and the other is from the United States. India first. The wholesale inflation in India has fallen to a 21-month low. It's recorded at 5.85% in November. The number was 8.39%, and this was just a month ago. A steep decline, definitely. Now, India has released these figures just a day after the U.S. recorded a lower than expected CPI of 7.1% for the month of November. That figure again was the smallest advance since December 2021. So, will it be correct to say that inflation is not as sticky as it was? And what has it really been for central banks across the world? Are we nearing the end of rate hikes, or is it really too early to take a call to pass judgment on this? And now that brings me to the FOMC outcome. That's expected later tonight, where the consensus is that the Fed would go on and hike interest rates by 50 basis points, lower than the 75 basis points on 4 previous occasions this year. And this decision is going to decide the direction that our portfolios take. We'll open up that debate, but first let's listen in to what the Indian Finance Minister had to say about inflation and about the Indian growth story.
Fiscal deficit was estimated to reduce from 6.9% of GDP in the last year's RE to 6.4% of GDP in the current year's BE. This is very much in line with the government's commitment to achieve fiscal consolidation announced in the budget of 21-22. That is to reduce the fiscal deficit to a reasonable level till 25-26. Latest data on CPI proves it. Inflation has come and it is now come down, and it is now in the tolerable band of the RBI. Inflation has been declining since April 2022. Indian rupee against every other currency has only strengthened.
Yes.
And against the dollar, we have performed much better than many other emerging market economies.
All right, so that's what we got from the Finance Minister when she was speaking in Parliament about the inflation story. Meanwhile, we are here to discuss the possibilities. Have we reached the peak of the inflation scenario, as it were, not just in India, but the U.S., globally? Now, what are central banks going to do? Let's discuss this with Siddharth Sanyal, the chief economist at Bandhan Bank, is joining us, along with Nadia Elbilassy, the market analyst at Equiti Group, and Peter Cardillo is here with us as well, the chief market economist with Spartan Capital Securities. Great to have you all with us tonight on India Tonight. Siddharth, coming to you first. What is your reading of the RBI's interest rate hikes, Siddharth, and how the hikes have been able to control the Indian inflation so far? Will the RBI, you think, persist to bring it down further? Do you think the worst is over on the inflation front, at least for India?
Well, your last question first. I think the worst is really over for inflation in India at the moment. At this moment, we have seen some positive surprises on the inflation front, or downward surprises on the inflation front in the context of India, in the context of UK, US, and globally in general. So basically what we have seen, globally central banks have been committed, they have been hiking rates pretty aggressively, much more aggressively than what we have seen in any time in the recent past, and possibly that is having some effect on commodity prices and risk sentiment to some extent. Also, the COVID-related disruption in supply bottlenecks, which were there in the recent months, that seemed to be easing a bit as well. In case of India, additionally, food price inflation seemed to be coming under check during the winter months at this moment. So overall, all these things put together in case of India, I think the inflation trends from here on can actually remain much more well-behaved than what we have seen in the earlier parts of the year. In fact, today's print of WPI, which had seen a 21-month low, is very, very meaningful in this particular context, because not only there had been a very sharp drop in the headline number, the softening actually came from a very broad-based fashion. So overall, we can expect that inflation in India remain better under check. I'm not saying it's going to the 4% handle anytime soon, but as things as it has come within the RBI's tolerance band, I think that will give RBI some bit of breathing space.
Some breathing space for the RBI at this time. Peter, there's always a lag between rate hikes and their impact on inflation. How has the US done on that count, and how does the print look now? Do you think it's going to convince the Fed that the hikes are working, so it may be prudent to lower the pace of rate hikes?
Yeah, I think they will lower the pace of rate hikes. And in fact, we're looking for a 50 basis points hike today, probably 25 in January and 25 in March. And I think that should probably take us close to the terminal rate because we've had strong evidence that inflation has peaked here in the United States based on commodity prices and probably even more important is wage inflation, which seems to have peaked. We have one or two months where perhaps there's a little bit of a surprise on the upside, but basically the trend seems lower, and that doesn't exclude the fact that we're headed for a mild recession, and so inflation will remain elevated, but certainly it's going down and it's in the right direction.
Peter, and I'll come to that problem, if you can call it that, when it comes to the wage situation in the US, because that puts a little bit of a conundrum for the Fed. But meanwhile, Nadia, since the rate hikes have come into play, how have the markets been performing globally? How have the investors' ability to take on risk changed since the time the central banks have hiked these interest rates to tackle the price rise?
So Vikram, last week, major indices actually went down and we see them in the red, but we've had a couple of good days now ahead of the FOMC, especially with the dollar downtrending. So we've seen that we do have some potential for example, the S&P to hit levels of 4,000 again. Definitely markets are going to cheer this news if it's 50 basis points, but it also depends on the dot plot for the next year. So if it does include the approximate Fed members, prompting for 25 basis points, then definitely that's good news for the stock markets because stocks don't like higher interest rates. So we could see potentially the three major indices cheering this news unless Powell had something different to say today in his speech. So the main focus won't just be on their decision because the 50 basis points had been already priced in. So it's going to be the tone. Is he going to be more hawkish? What is the dot plot going to signify for next year? And that's what the stock markets are going to look for. But already we've had futures today looking good. Now with the US opening, we can see that stocks are edging higher while the dollar, for example, is going lower. And that's giving other FX majors a chance to take a breather like the euro, the GBP, and any other majors basically versus the dollar.
That's right. Siddharth, now looking at this volatility that we are seeing in crude oil prices, how do you think central banks, and that includes the Fed and the RBI, how are they going to approach interest rate hikes from this point onwards? We are seeing these inflation prints, and they're showing that downtrend like we are talking about. And do you see these actions in sync by central banks globally to start unwinding the monetary policy? Do you think that's going to happen anytime soon, or do you think it's going to take some more time to convince them further and get more growth-oriented?
Well, central banks look set at this moment to remain cautious, and they will not possibly start unwinding some of the hikes that they have delivered in a hurry. But the way inflation has started behaving over the course of the last few weeks possibly will be offering a lot more comfort to the two central banks. In case of India, what we have seen that after hiking by 190 basis points over a course of last just 4 or 5 months between May and September, a very, very unusual and extremely rapid pace compared to our own history. RBI moved to a slightly lower gear in December by moving 35 basis points. Now, the key question at this moment, whether this was the last hike or we have one more hike sometime in February. My sense is that that particular question RBI will also take up much closer to the policy. By that time, they will not only have today's FOMC decision, but one more FOMC decision towards the end of January. I think that particular decision, as well as the Fed dot plot and general Fed guidance in general, will play a very significant role in RBI's thought process also. One particular good point for zone of comfort for RBI is the recent movement on the currency front. Not only the inflation has started moving slightly more sideways and downwards, actually, the currency has actually started more sideways at this moment. That should also give RBI a little more a bit more comfort. So overall, my sense is that if the situation keeps on improving over the course of the next 6 to 8 weeks, we might even see a situation that RBI may avoid hiking in February. But even if the RBI hikes, the chances are very high that it will be the last hike, and that particular hike will not be more than 25 basis points. So policy rates in India are likely to cross something like 6.5% in India, unless it stops here at 6.25%, where it has reached now at this moment.
So 6.5% is where you see it peaking, these interest rates, at least in India. Peter, we were talking about the impact of rate hikes on global growth, and that, of course, is a given. But seeing the resilience of the labor markets, like you were alluding to, the consistent demand for labor, is the U.S. economy, in your opinion, showing more resilience than what the Fed was expecting? And how does that put a spanner in the works of the Fed right now? Because as far as the markets are concerned, they are looking pretty sanguine at this point in time. Of course, as interest rate hikes are announced, we see the markets get affected. But at this point in time, when you're looking at the resilience of the American economy, how do you think the Fed is going to pace those rate hikes going ahead from here?
Well, first I want to say, some of the rate hikes, the past rate hikes, have yet to infiltrate the economy. So that means the consumer is destined to slow down. There's no question that up until now, the consumer has been very strong and was able to cope with the higher cost of financing debt. But remember that another 50 basis points or 100 basis points plus the last 50 basis points, that's going to slow down the consumer, because once that fully penetrates the economy, that means that the cost of financing credit is going to be a heck of a lot more than what they're paying now. And that's where that's where the consumer will begin to pull back. And so that's why I say we're headed for a mild recession. Now, in terms of, again, of what the Fed is likely to do today, we all know what they're going to do.
Yes.
But I think the key is, where do they indicate the terminal rate?
That's right.
Will it be 4 3/4, 5, which probably is already in the marketplace? If it goes beyond that, that could be a little sticky point, and that would probably increase the chances of a mild recession turning into a more severe recession.
Right. Yeah, so if we are seeing it go beyond 5, you're thinking that recession might be a little sharper, but that remains to be seen. And we don't have much longer to wait in terms of the FOMC's decision, but it's a commentary that we are watching out for. And the other moving piece is, of course, the Chinese economy and how that's going to affect the future course of action by central banks. The reopening of the Chinese economy fraught with reports of COVID cases rising, and that puts in doubt the entire demand resurrection story. And we'll have to watch out for the uncertainty that China poses as well. But for the moment, it's where we are leaving it. Peter, Siddharth, and Nadia, thank you very much for joining us with your perspective on India Tonight. Now let's take a look